Good afternoon, Andy Moss here, tradingadventures.com with your Thursday market update. And this is first a look at the roadmap. These are 130-minute candles on the major index ETFs, and not a lot changed in terms of character here. We're still below a sharply declining 5-day moving average. That is the blue line. We're below a week-to-date anchored VWAP. We even are still below the 2-day VWAP here. That's the week-to-date is the purple. The light blue line here is the 2-day. And price continues to probe lower and lower. And while this is not much of a change in character overall, we did have one important development today, and that is the SPY closing below the 200-day moving average. That is been in the works for quite a while. We can see moving averages are not support, they are levels of interest, and we watch and see if and how price reacts at those levels. And today we opened well below, dipped a little further. Let's go over here to the 30-minute chart for a second to look at the intraday action. We opened with a gap down, drifted a little lower, and then this little rally here at the end of the day was headline driven. You can see some volume come in, not huge volume, but a little increase over the middle part of the day, which is normal there in the closing hours. And it really didn't even hold up that well. So back down below and drifting around here kind of in the gap this afternoon after the 4 p.m. close. So, but that's the meaningful update there. SPY now below the 200-day moving average. Qs, not quite. They closed just above the 200-day there, as you can see on the label, $592.55, and the close on the Qs today is $593.02. So just not quite 50 cents above the 200-day moving average there. And perhaps, I don't know if it's more important than that, but meaningful for sure is notice this area of previous lows, which we've been testing for several weeks now, or a little over a month and a half. We're below that now. The question will be, does that open up more price action down in this area? It certainly is a possibility. This is a bearish chart. This was a bearish consolidation pattern in an intermediate downtrend, and now we have opened that up to the downside. So that is something we want to watch going forward on the Qs. DIA, day 2 below the 200-day moving average. It closed sharply below yesterday. It did not make up much ground today. Over here on the 30-minute chart, you can see the late afternoon rally and still chopping around in this kind of gap area after the 4 p.m. close, but not a lot of sustained progress there for the Dow 30. And finally, IWM is the last holdout. It is still above the rising 200-day moving average, but it certainly seems to be heading quickly in that direction. We don't have an oversold RSI yet, for what that's worth. We do have a decent level of degree of extension from the declining 8 and 21-day moving averages. And notice the rally came back up here again over on the right-hand side on the 30-minute time frame, right back up to and well beyond the 5-day moving average and the week-to-date anchored VWAP here, but closed below. So not a lot of encouraging action there on the small caps or any of the indices there across the board. So that's your look at the major stock index ETFs. Bitcoin still declining after this test. This pink line is the year-to-date anchored VWAP, and it's back down now to the area between the flattening 8 and 21 day. That's the yellow and the blue line here. This orange line is the anchored VWAP off of this peak, or this relatively minor high right before the breakdown. So no lasting progress there on Bitcoin either. And looking at the dollar still chopping. We don't look at this too much on a daily chart, but it is still moving around up here in this area. What else do we need to look at? We can look at the rest of the world quickly. Still declining. China, choppy and low. We'll cover these more on Saturday in the weekly chart threads, or the weekly chart breakdown. Bonds, a little bit of a rally here. Certainly no change in the situation there on the AGG and the treasury bonds, very similar situation. So that's the market for today, and so far this week. It continues to be the broken record message of go slow, do less, be patient. This is not a market to take heroic long positions and try to time the bottom or to buy the dips or to do anything outlandish. We are taking smaller sizes, doing less, and going slow.